when you see gold and cryptocurrencies simultaneously increasing at the same exact time, that is going to be extremely bearish for the U.S. dollar, because that is really a sign that people are opting out.
What do you get when you combine SD bullion and the New Zealand Mint? You get the lowest price silver coin ever released to the world. Introducing the Roaring Lion, a 1 ounce, 4 nines fine silver coin with micro engraving security that retails for lower than some of our competitors sell silver bullion rounds for. Check out this magnificent beast, the Roaring Lion silver coin, at sdbullion.com/roaring. That's sdbullion.com/roaring. All right, all right, all right.
Hey everyone, this is Elijah Johnson with silverdoctors.com, and back with us today is Jerry Robinson from followthemoney.com. Jerry, thank you so much for joining us today.
Great to be here, Elijah. Thank you for the invitation.
All right. Now, you follow a lot of different markets, the stock market, the cryptocurrency markets, the gold and silver markets. I'd like to get your take on all of these in this interview. But starting with the stock market, I've thought this for a long time, and it seems like you have as well, that it seems like the stock market is extremely overvalued. It just keeps going up and up. But still, you're bullish on the stock market and say, there might be a lot of potential. There are a lot of potential gains for investors, but we should really just be cautious because the game could end at any time.
Yeah, I think that's probably a good way to put it, Elijah. The way that I view the market, and of course, I've been trading for a long time. I mean, I started trading. I traded my first stock back in 1996. I guess so I've been trading for more than 20 years. Traded my first option in 2002, and then I traded my first cryptocurrency in 2012, 2013, somewhere in there. And yeah, I mean, one of the things that I learned early on, and I'm so thankful I learned this, is the fact that markets, they move in trends. They move according to trends. And so, it's not very helpful, I think, to look at a market, say the stock market, and call it a bubble whenever actually it's in an uptrend, or to call it in a bear market when it's actually in a downtrend. I think this is something that Jesse Livermore, one of the famed traders of the early part of the 20th century, really helped me grasp. He's one of his, I don't have an exact quote, but basically he said, don't call a market a bear market, don't call a market a bull market, just call it an uptrend, just call it what it is. And so markets move up, as we all know, and then markets, also move down. And especially in the stock market, which is heavily manipulated by large institutional investors and, of course, the Federal Reserve through its words and through its actions and policies, the market obviously moves in boom-bust cycles. And so therefore, when the market is in an uptrend, if you live in denial of the uptrend and you live in fear of the uptrend because of the inevitable downtrend, then you just miss out on the uptrend. And I think that's really what we saw happen back in 2008, 2009, where at the very end of 2007, we issued an alert to all of our then subscribers. We were much smaller back then than we are today, but I issued an alert to all of our members at the time and saying, look, the market is just formed a long-term downtrend. It's formed a long-term downtrend. And so that's a pretty big signal. And so we started getting out. And then in about the middle of 2009, we saw that it formed a new uptrend. And so obviously there's a whole bunch of noise around the stock market. There's the Fed, and then there's the CNBC, and there's the financial press, and there's individual investors who are all have opinions. But in reality, if you just go with the trend, then you end up usually doing much better. And I just focused on the trend. And so in 2009, the market was moving back up. So we got back in. And except for one brief respite in 2011, where we did actually have another full-blown long-term downtrend signal, we've been in the market. And even up until now. And so now when we look at 2017, Elijah, and we see what's happened since Donald Trump has got elected as president, and the tax cuts, of course, and the deregulation, the deregulatory agenda, I mean, stocks are just going nuts, and they're just moving across the board. And it's not just U.S. stocks, it's global stocks. So we track about 42 different markets here at followthemoney.com for our members. And virtually every market that we track is up. It's just unbelievable. So we have a full-blown bull market, if you want to call it, or an uptrend across the board. And we don't try to outsmart that. I mean, I'm not smart enough to know where the market's going to go tomorrow. I just don't know. I mean, I literally don't know. As a trader, as an investor, I don't know what the weather is going to do, let alone what the stock market's going to do tomorrow. So I don't try to pretend. I don't try to forecast. I don't try to tell you where things are going to go. I have no crystal ball, and if I do, it would be broken. So what we do is we focus on the trend. And so when the trend is moving higher, we follow the trend. We follow the money. And then when the trend changes, and inevitably it will, when will it happen? I don't know, but it's going to change. We're going to have a big mean reversion. We're going to have a big crash. Of course we are, just like we did in 2008, just like we did in 2000, just like we did in 1987. What goes up comes down. Boom bust cycles. We're in the middle of one. We're in the middle of a big boom. And so when we start to see the signs, when we get a long-term downtrend signal, we're going to alert all of our members, and we're going to start either doing one of two things. Either A, just completely getting out of the market entirely, or B, what we did back in 2008 is we're going to focus on focusing on shorting the market. Now today we have access to inverse ETFs, which we love to teach our members about. And inverse ETFs allow you to make money on the way down because those ETFs go up when the market's going down. So thanks to several different kinds of financial tools out there, we'll be able to profit from that downtrend. But in the end, as you stated, I am bullish. I guess that's the right word. I just believe we're in the middle of an uptrend, so I'm not going to fight the uptrend. But when we get a downtrend signal, I'm going to change my tune and move and stay with the market. Now, one last thing, Elijah, is that fortunately we are in the middle of a trending market. Sometimes guys like me who are trend traders run into problems, and that is whenever the market starts going sideways. And so when the market goes sideways and you don't have a clear trend, which we don't have now, fortunately, because I don't care if the market's going up or going down. I just want it to move so I know which direction it's going. But when it moves into a sideways pattern, that's when I tend to just move my investing somewhere else. I don't like sideways markets. We had one of those back in the 1970s. It was brutal. We've had those time and again throughout history. Right now, we're in a trending market. I expect we're probably going to move from a major uptrend to a major downtrend, sadly, whenever this thing finally changes. But when we move into a sideways market where it just goes sideways and nothing happens for years, well, that's where we move on to something else. But for now, as long as the market's trending, Elijah, we're going to be riding it.
Now, you've also discussed why people shouldn't mix their politics with investing. Now, how does that apply to, for example, right now, maybe people don't like what Trump is doing, but then again, that shouldn't make them bet maybe against the stock market.
Yeah, that's a great statement. And it's been something that I've been teaching our members here for a long time. We have we coach a lot of trading students and investing students, people who are trying to either trade stocks, ETFs, options, or cryptocurrencies, commodities, whatever the case might be, a lot of ETFs. We teach them, and I've been saying this for so long, is that you should never mix your investing or your trading with your politics. And the reason I brought that up on the podcast the other day, probably referencing that, is I heard it out of the mouth of Warren Buffett, which I thought, wow, that's pretty interesting. I've never heard anybody else say that, but it's a very important statement. I'm not saying I made it up. That's the way I've always viewed it. I've just never heard anybody else say it. And he did. And Warren Buffett basically said the same thing. He said, don't mix your investing with politics. And basically what both of us are saying, I guess, is the same thing, is that, oftentimes we will, humans are prone to, allow the their political beliefs to kind of adversely impact their investing. So, for example, I'll give you a perfect example. Back in the time that President Barack Obama was in office, there were a tremendous amount of people who did not trust him. They didn't trust him. They didn't trust that he had the good of the country at heart. Many people thought, do you remember all the conspiracy theories? People thought he was a Muslim. People thought, just all kinds of crazy, crazy things. And then, of course, there was also, I remember being at investment conferences where people in the audience literally thought that he was the Antichrist, and also people who thought that he was never going to leave office. And a lot of these dumb theories come as a result of the internet. The internet fosters most of these stupid theories. Well, anyway, it's one thing to believe something like that. If you believe something like that, whatever, that's weird. But if you go to the next step and you say, I believe it so much that I'm not going to invest in the stock market because of it, or I'm not going to invest at all, then you're just hurting yourself. Then your stupidity has just turned into actually hurting your own portfolio. It's actually hurting you as an individual. And at that point, that's a dumb thing. So, and it's the same way today. I think it's a great example, Elijah. You've known me for a while. We've known each other for a long time. And I think we first met back in 2011, 2010, something like that. Well, back, when the Tea Party was raging, this is another perfect example. When the Tea Party was raging against Obama, and the Republicans were so angry about the national debt, and they were so angry about the out of control deficits and all of this underneath Obama, they loved my book, Bankruptcy of Our Nation. They loved to have me on, and they always wanted me to talk trash on Obama. But my point was always like, hey, we're in a whole bunch of debt. It doesn't matter who the president is. We're in a whole bunch of debt. We got to do something about it. What I've noticed is that since Trump has come into office, the seats have changed. And this happens. Nobody should be surprised by this, but the seats have changed. And so now no Republican wants to talk to me about my book. Who wants to talk to me about my book, Elijah? Democrats. Democrats now are suddenly all bent out of shape about what? About the $20 trillion national debt. They're bent out of shape about how the tax cuts are not being paid for. Who's going to pay for these tax cuts, right? So now suddenly the Democrats are the ones all bent out of shape about the national debt and about the deficits. They didn't care about it when Obama was in office, but now they care about it now because Trump is in office. Okay, so that's just dumb politics, right? We can all see through that. But whenever you actually invest based upon those dumb politics, then you are really hurting yourself. So when the market is in an uptrend, I don't care who the president is. When the market is in a downtrend, I don't care who the president is. It doesn't matter. It doesn't matter who's in power. It doesn't matter. And none of that stuff matters to me as an individual when I'm looking at the market. So I think people today who are concerned about Trump and they say that, his tax cuts are going to hurt the poor. If they stay out of an uptrend because of that, maybe that's their conviction. That's fine. But my point is that that's not going to help them financially. It never helps to invest based upon your politics.
Definitely. Now, moving forward here to the precious metal markets, I know gold was up quite a bit last year, but over 10%. What is your perspective on where gold and silver are headed in 2018?
Well, again, I have no crystal ball, but I will say this, that gold and silver are two of my very core holdings. I'm a huge believer in gold and silver, predominantly gold especially, because it has always been viewed as money. Any student of monetary history knows that throughout time, these metals have been viewed as money. And one of the things that I've talked about for years, at least for a decade, is the petrodollar system. And the petrodollar system is obviously crumbling before our eyes. We have a weak U.S. dollar. It's continuing to hurtle downward, especially as the whole world looks at our current situation and they see what's going on. So that bodes well for gold. But in addition to the petrodollar system, something else has come about that makes me even more bullish on gold, and that is cryptocurrencies. Now, cryptocurrencies, they certainly have an amazing technology behind them. It's a revolution that's going on right now in money, right? So the topic of money There's a revolution here with cryptocurrencies. But the problem is that that doesn't mean that people do not want to hold their money in their hand. They always have wanted to hold their money in their hand. And so we go through these cycles as humans where, we will go to one extreme or the other. And so when I look at the petrodollar system, I always looked at that and said, that's the reason why I own gold. I mean, the dollar and, other reasons as well. But that was one of the major reasons. That the breakdown of the petrodollar system is a great reason to be holding gold as insurance. But with the advent and the mania surrounding cryptocurrencies, which no one can hold in their hand. And again, I own cryptocurrencies. I've made a lot of money with cryptocurrencies. I treat them the same way I treat any other market. But my point is that as a gold bug, as a person who really appreciates gold, cryptocurrencies really are, I think, probably the number one reason why people should own gold, predominantly because it is a reformulation of what money is. It's defining money, and you cannot do that. You simply can't do it. Money always has to fit a certain criteria, and people have always desired to hold it in their hand. So we may go through a period of time, and it may be a lengthy time, where money is simply viewed as something that's not held in the hand. But mean reversion is always there. People will always revert back to the mean, and that mean is that people want to hold their own money in their own hands. And I think gold meets that more than anything else, including paper money and so on. So as far as gold goes, I am a perma bull, if you will, on the fact that that gold will win in the end against paper currencies, against cryptocurrencies, against everything else because of the psychological needs that gold satisfies with money, and because of the fact that I'm a Christian believer. The Bible says the gold and the silver are mine, saith the Lord. I believe that even gold and silver, have a biblical connotation to them. So, for all of those reasons, I am a strong believer in gold, and I don't think that everybody should, sell everything they have and buy gold. I think that you should have a diversified plan, and that's why I have part of my financial plan exposed to physical gold that I can hold. And so those are my thoughts on it. As far as where it's going, I mean, right now, the price of gold is below the 1350 level. We just called a new position uptrend on gold for all of our members a couple of weeks ago. It has got past a few resistance hurdles, but the big resistance hurdle is the 1350 to 1380 area of resistance. If we break through that, that's fantastic. And I've been telling our members for a while now that when you see gold and cryptocurrencies simultaneously increasing at the same exact time, that is going to be extremely bearish for the US dollar, because that is really a sign that people are opting out. And so we haven't seen that moment. We've seen cryptos go up, but gold pretty much do nothing. I think when you see both of them rising at the same time, that's going to be a repudiation, a very clear repudiation of the US dollar. So long term, I'm bullish on gold, but 1350, 1380 is the near term resistance I have my eyes on.
Now, speaking of cryptocurrencies, I know you're also bullish on them. I guess, is there anything you're not bullish on in 2018?
Well, bullish may not be the right word. It's respecting the uptrend. It's really just a healthy respect for the uptrend. I don't like to sell things that are going up, and I don't like to buy things that are going down. And so because of that, because everything is going up, it doesn't mean that I think that it's going to go up forever. But I do think that you have to take advantage of those moments. I mean, all of us are hurtling towards a retirement that we may or may not have enough money for. I mean, the government certainly is not prepared, so we have to be prepared. And that means that I can't ignore opportunities to be involved in uptrends. I just can't afford to do that as an individual. I have to be involved in uptrends if I want to be able to have a comfortable retirement. I can't ignore reality. I can't ignore what's going up simply because I don't want it to go up. Or because it doesn't fit my politics, or it doesn't fit my idea of what should go up, or it doesn't fit. The markets don't care. They don't care what I think. So I have to align my thinking with what's actually happening in reality. And so, but did you ask me a question about cryptos? Where do I see them going, you say?
Right. I mean, where do you see them going in 2018?
I'm bullish. I'm bullish on cryptocurrencies. Very bullish. I think that this is the one market that the big money totally missed, and they're embarrassed about it. You've heard guys like Warren Buffett, Charlie Munger, and many others who did not participate in the cryptocurrency rally since 2010. We've seen booms and busts along the way, but I was an early adopter. I bought Bitcoin and Ripple a long time ago, back in 2012, 2013, somewhere in there. And I got to go back and find the date. People always ask me, when did it was sometime back then. I can't remember. It was very cheap. That's all I remember. But I started investing back then. And over time, it was pretty much of an ignored market. Elijah, back in 2016, CNBC, Wall Street Journal, they never wrote anything about, they never said anything about cryptocurrencies, Bitcoin, Ripple. I mean, they didn't talk about that stuff. Now they won't shut up about it. So 2017 is really the year that it broke through. That was the year that people really started to understand that there was something here. We've since seen a pullback since the beginning of the year. There's a lot of FUD, as they say, fear, uncertainty, and doubt. But I'm very bullish on cryptocurrencies. I just put out a report to all of our members on the 10 cryptocurrencies that I think are going to succeed in 2018 based upon their technologies. I've been researching this space for a long time and have made an astounding amount of money in the cryptocurrency space because we were early adopters. But I still think for people who are new to the space, now is still very, very, very early. That we're still going to see lots of booms and busts ahead. I think the next boom we're going to see in cryptocurrencies will outpace the one we saw at the end of 2017. And so I think we're going to see bigger booms, bigger busts. As far as cryptocurrencies, my rules are pretty straightforward. I don't put more than 5% of my total investable assets into that asset class. I do recognize cryptocurrencies as an asset class, but I don't view it as something that's worthy of more than 5% of my total investable assets. That way, if they all go to zero and the government clamps down, I mean, I'll lose 5% of my total holdings, of my investments. Will I be happy? No. But will I be broken on the street? No. So, I expose myself enough to where I get good returns if they go up. But at the same time, if they crash and burn, then it's just a learning experience. But I am bullish on them. I think that there's a tremendous number of people who want to buy cryptos. They just don't know enough about it. And I think you're going to see more and more people rushing into the market this year. And you'll see bigger booms than what we've already seen. I have no doubt about it.
All right. Well, Jerry Robinson, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Sure. Well, if people want to find us online, the best thing to do is just go to followthemoney.com. If you're looking for a trading coach, if you want a system that you can use, if you're tired of just kind of guessing at what to do, you're tired of just looking at the news and trying to figure out what to do, what we do is we actually systematize the approach of investing. We systematize the approach to trading. If you're interested in cryptocurrencies, we have a report on that we provide to all of our members. If you want a trading idea released to you every day by text or email, we provide that to our members. If you're looking for a charting system to be able to know when to buy a stock or when to sell a stock or an ETF or a commodity, that's what we do. So we're here to help you, to kind of guide you along the way as you try to make sense out of all of the madness. Followthemoney.com. And if they don't want to become a member, that's fine. We also have just a free podcast. They can check us out. Followthemoney.com and just click on the podcast button. We have a trading podcast we've done over the years. We also have our Follow the Money radio podcast, which has many listeners all around the world. But that's where they can go.
All right. Once again, thank you so much for your time, Jerry Robinson.
Yeah, thank you, Elijah. My pleasure.